So your credit score can have a really big impact on which loan program you decide to go with, especially if you're putting a low down payment down. So the most common low down payment loan programs are going to be FHA and conventional. The FHA product has a 3.5% requirement for a down payment. The conventional product requires 3% or 5%, depending on the circumstances. The reason that your credit score has a big impact on this is for two reasons: the rate and the mortgage insurance. So the interest rate that you pay on your mortgage, and then the mortgage insurance, which is the additional fee that you have to pay whenever you put less than 20% down on a home. FHA financing is a lot more forgiving to lower credit scores. Conventional financing really penalizes lower credit scores. So if your credit score is low, FHA is probably going to give you your lower payment just based on rate. But the other big factor is the mortgage insurance. So the mortgage insurance, again, it's that monthly fee that you have to pay whenever you put less than 20% down. For conventional financing, that mortgage insurance payment is based on your credit score. So the higher your credit score is, the lower that additional fee is. And the lower your credit score is, the higher that additional fee is. With FHA, it's not like that. With FHA, that fee is the same regardless of what your credit score is. So if you have a 500 credit score, you're getting the same mortgage insurance fee as an 800 credit score person would go with. So it's going to be much more beneficial in rate and for mortgage insurance going with FHA, because your mortgage insurance is fixed. You're not getting penalized for having a low score, and the rate is more forgiving. It's not going to make sense if you have a higher credit score to go with FHA, because now you don't get the lower mortgage insurance payment, which conventional would probably give you a much lower mortgage insurance payment if your score is good. And that mortgage insurance payment for conventional financing eventually goes away once you pay down your mortgage enough to have 20% equity. With FHA financing, that mortgage insurance payment stays on there for the life of the loan. So for all 30 years, you're going to be paying that additional fee on there. The only way to get out of that would be either to refinance, or if you originally put 10% down, it goes away after 11 years. So I hope this information was helpful for you. I know this one was a little bit more complicated. If you have any questions, feel free to reach out to me, and I'll talk to you next week.